Chuck Schumer was caught gaslighting the American public when it comes to President Trump's economy. So earlier today, we received great economic news. We exceeded all expectations. Basically, all the experts and forecasters predicted that the economy, the GDP, was going to grow by just 2.4%. Well, we exceeded expectations. The official number is 3.0. Yes, 3%. That is incredible economic news. And in fact, even the folks over at CNBC and Bloomberg were surprised in praising this. Take a look.
3%, up 3%, better than expected. That would be the highest level since the third quarter of 24 when it was up 3.1%. On the consumption side, up 1.4, very close to estimates. Up 1.4 would be the best since the last quarter of 24.
And people that don't like the president and don't want things to work. And, you know, like Senator Elizabeth Warren will come on and say, inflation's out of control and the economy is getting killed by what's happening by these tariffs. This 3% with the market at new highs, and really we haven't seen inflation, you know, go up back to 3%. Maybe it will this week. Maybe we'll see it. But none of these horrible things have happened, but they still talk like it's happening. It's amazing.
Well, there's an important lesson there. Don't pick a congressman to be your money manager. That's what I would say. But in the end, Congress has their own reasons to point out certain things. And the Democrats, of course, as you pointed out, really don't want to see the current administration have some success. But there's no doubt that this is some success. We're seeing more horsepower. We're seeing better equities. Inflation really hasn't changed much in the last year.
We've got a stronger than expected GDP number, 3% for the second quarter initial read. That's up from a 0.5% in the first quarter. 2.6% was what was forecast.
Now, the first quarter numbers I explained in a previous video were totally misrepresented. I mean, okay, technically they were accurate, but quarter one was a true mirage, a negative mirage, because don't forget that the GDP measurements take into account exports versus imports. And what happened during quarter one? Well, businesses were very nervous about the tariffs. This is new territory, at least in our lifetime, so they had no idea what to expect. And so because they were nervous, they wanted to prepare, and they started importing more goods. They started stocking up because, hey, prices are going to go up because of these tariffs. That was the thinking, right? And so what we saw were imports going through the roof as all these businesses are stocking up on supplies. Meanwhile, it's outpacing the exports. So you have more imports, less exports, and that's why quarter one numbers were what they were. However, if you actually took away the imports numbers, the number of exports actually increased in quarter one. So it truly was a negative mirage in the sense that if you took away the panic buying that caused the imports to increase, if you took away businesses stocking up on goods and you just exclude all of that and take a look at the normal baseline of imports and then consider the exports going up, take a look at all the other fundamentals of the economy, the employment rate, wages, etc., quarter one was quite strong, but the media, of course, is going to spin this. The New York Times, U.S. economic growth softened in the first half of the year as tariffs weighed on consumers and businesses. Of course, they leave out the fact that we are now exceeding expectations now that the second quarter is fully accounted for and behind us. The Wall Street Journal actually gave this a fair shake, believe it or not. The U.S. economy turned to growth last quarter with GDP increasing at a 3% annualized rate, largely due to trade swings. Well, Chuck Schumer, despite all of this great economic news, despite all of these great numbers, despite the headlines, even though CNBC and Bloomberg, which is never favorable for Trump, were praising the economy, Chuck Schumer went to the floor of the Senate and started calling this a mirage. Yeah, he's trying to gaslight the American people. Take a look.
So this morning, we got more worrying news showing how Donald Trump's administration is raising costs and sowing chaos in the economy. The New York Times headline put it succinctly: U.S. economy slowed in the first half of 2025 as tariffs scrambled data. And while the Trump administration will try to wave rosy headlines about the Q2 number, today's GDP number is in fact a mirage, because some ominous numbers lurk under the hood. Business investment plunged in the second quarter by 3.1%. The fact that business investment plunged so starkly is very troubling. It shows that already businesses are worried about growing their operations, worried about hiring more workers, worried about trading with their international partners, and worried in general about the future. And this number is another data point in a larger pattern. Donald Trump's tariffs are weighing down the U.S. economy, spiking costs for small businesses and families alike. And if Donald Trump keeps up the chaos, the dangers for the economy will continue to get worse.
Now, on its surface, that sounds scary, right? Oh, businesses are cutting back on investments. That is an underlying threat to the United States economy. And the sad part, like, imagine if someone is watching C-SPAN or someone's just reading the New York Times. They're not going to get the other perspective, which is the actual fact-checking that needs to go on the other side of the aisle, on the right side of the aisle. So he's talking about businesses cutting back on investments. Why did they cut back? He left out a key point here, and this is actually really important. So according to the World Economic Forum, which again is not very favorable towards President Trump, U.S. companies cut investments in China to record lows. As you can see, this was published today, July 30th, 2025. I mean, that's the whole point of these tariffs, is it not? To have businesses spending less overseas so that they invest more in the United States. And of course, that's going to take some time. That's going to take a new baseline to be achieved over the next few months. But companies investing less overseas, I don't see how that is necessarily a bad thing, at least for American workers. And by the way, the only reason I point out that those outlets aren't favorable towards President Trump is to prove the point that it's not as if these are news sources trying to spin the numbers or news sources trying to defend or obscure the mirage, as Chuck Schumer put it, right? Like, you can see the real good economic news even from these leftist sources. Now, it's not just what they're investing or no longer investing in China, but it's actually seasonal. That's part of the reason why investments have gone down, because one of the things they measure in business investments are their core orders. So according to this, so-called core orders fell 1.3% last month, June. Okay, that sounds scary, but take a look at that middle paragraph in red. Core orders are included in the monthly report on durable goods. New orders from durable goods sank 6.3% in April after a 7.6% gain in the prior month. But both the big increase and big decline were tied to seasonal swings in contracts for new Boeing passenger planes. If transportation is omitted, durable goods orders rose a scant 0.2%. Sure, it's scant in April, but hey, going up is still a good thing. It's at least not negative. Auto and plane bookings often mask what has been going on in the broader industrial side of the U.S. economy. So even there you see that it's because of seasonal swings in industries that don't necessarily affect our day-to-day lives, our everyday cost of living. Well, it's even more impressive if you take a look at the quarter-to-quarter changes. So quarter one here represented in gray, and then quarter two in this nice rhubarb color. And you can see the exports going through the roof in quarter two. Now, you'll notice in quarter one, exports were down. Some of you are going to say, Daniel, earlier in the video, you said 2 times that exports actually went up. Well, this is comparing to the previous quarter. So it's comparing quarter one, 2025 to quarter four, 2024. And exports are usually up in the fourth quarter because of the holidays. And so a lot of this is seasonal. What I was doing was comparing quarter one, 2025 to quarter one, 2024. But you take a look at this and the change in private inventories going down, like we just talked about, consumer spending going up, whereas it was just even in quarter one, federal government spending going down. I mean, this is great news all around. And what's even better is the Wall Street Journal actually polled and surveyed the top 69 economists in the United States, and they asked them to rank the likelihood of a recession. So in gray, you see each individual economist's prediction of the likelihood of a recession in the next 12 months. All the way on the right side, you can see that one economist pegged it at a 99% probability of a recession, and all the way on the left side, on the low end, we have them around a 30% likelihood of a recession. Again, these are the gray dots, and these surveys, the gray ones, were their answers back in April. Well, the latest survey is in blue, and you can see across the board, with the exception of just one economist, all of them think that the likelihood of a recession has gone down from their initial prediction. Or some of them say, oh, the odds are exactly the same. But by and large, most of them say it's gone way down. And some of them have just done a complete about face. Take a look at the second to last one on the very right. This economist said in gray in April that there is a 75% likelihood of a recession. Well, according to the latest survey, they now say it's dropped to just 25%. In other words, most economists were panicking about nothing. They have now admitted that the economy is stronger than they thought it would be. Yeah, so-called experts yet again. Well, it's not just the experts. It also affects us in our daily lives. So the Fed has a core measure that they like to rely on to understand what life is like for normal people like you and me. Well, according to the Personal Consumption Expenditures Price Index, or PCE, the Fed's preferred measure of inflation, it rose by just 2.1% in quarter two, down from 3.7% last quarter, quarter one, while core PCE just rose by 25%, down from 3.5% last quarter. And that's just great news all around. So according to that stat, prices in general are still going up, but the rate at which they're going up is slowing down. And that's what you want to see in order to get into those negative numbers, to get prices going the opposite direction. It's sort of like losing weight, right? You're gonna lose the water weight first before you start actually burning fat. Same thing here. We're just seeing that rate of increase going down, 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 and sooner or later it's gonna break even, and then we're gonna get into negative numbers. But the economy is not a bubble. We also have to deal with the rest of the world, and I think that also provides a good benchmark to see how America's economy is doing. So that raises a question. How are things going over in Europe? Well, according to the Associated Press and Fast Company, which reposted the article from the Associated Press, Europe's economy grows just 0.1% in the second quarter amid tariffs. So America, the United States of America, 3.0% growth. And then Europe, the entire European Union, just 0.1%, not too hot. Well, a National Economic Council Director, Kevin Hassett, talked about this some outside of the White House. Take a look.
It's really one of the best GDP announcements or releases that you could imagine, because there's blockbuster growth, way above expectation, and there's also a real almost collapse in inflation. It went down by about 1.5% all the way down to 2.1%, which is the Fed's target. And so to have high growth with low inflation and also high income growth, personal income growth was 3%. That's just like about a sweet spot for a GDP release. And I will add that all of this happened while $127 billion in tariffs was raised, which is clearly not harming the American consumer. And we've been downsizing government in order to be more fiscally responsible. 70,000 federal jobs have been reduced, and there was a 5% reduction in federal government spending while all this was going on.
Yeah, just great news all around. Very excited about that, and I'm excited to see what the second half of the year brings. Well, it's not just people like Chuck Schumer who are gaslighting the American public. There are businesses also gaslighting people like you and I, businesses taking advantage of the tariffs to bash President Trump to increase their bottom line. So I want to be very clear. This screenshot that I'm about to show you, I personally took on Facebook. This showed up on my Facebook feed, and you're gonna see why, because obviously I have a dog and 2 cats, right? Like, I was targeted for this ad. This isn't something that I randomly saw online and didn't fact check. No, I took this screenshot. I want to go on the record and say that this business is flat out lying. Take a look at this. So this was advertised. You'll notice it's by Marlene's Pet Shop, and this is a sponsored post, which means it's an advertisement. And they posted this graphic. We have bad news. We're saying goodbye to Kitty Curls. We're a proud family-owned pet business in the United States, committed to making flexible yet durable cat scratchers that function as toys, yada, yada, yada. But then it says that the products that they use to make this toy are no longer being imported to the United States, and with rising tariffs, we simply can't afford to keep making them. We just produced our final 400 units, and once they're gone for good. Thanks for all your love, yada, yada, yada. Well, that advertisement, based on the comments below, started going around Facebook about 5-6 weeks ago. And guess what? I looked on their website, no issues with their orders. Like, they have plenty left in stock. and no mention of going out of business. And if you go to the Kitty Kroll's website, no mention there either. Like, I'm still getting marketing emails from this company, zero mentions of going out of business. Isn't that funny? You would think that if you're going out of business, truly, you would email your customers, right? But instead, they're using it in a Facebook ad. I'm just saying, something smells fishy about that. Have you seen any businesses taking advantage of this tariff stuff to bolster their bottom line? If so, let me know down in the comments below. As always, though, that is just my analysis and commentary. That is what's going on in the world of politics from my point of view, and I would love to hear from you. Again, the question of the day for this video is, have you seen any businesses taking advantage of tariffs to basically bolster sales and get people to panic buy? Because I think that's what they're doing here. I've seen no indication that they're going out of business. And also, most companies, they put limits, stock limits. You can do that on the back end, basically how much you have in stock, to limit people from over ordering. And I just attempted to purchase 400. Now, I didn't actually like put my card information in, but I added it to my cart. No issues. Proceeded to check out. No issues. Yeah, if there really was an issue, and assuming that their back end is done correctly, it shouldn't even let me get that far. So I'm just saying, again, though, just my opinion, just my analysis. I could be wrong, but from my experience, when most businesses go out of business, they have a giant banner on their website. They don't just have it on one random ad that most people aren't going to see unless they're targeted with it. If you haven't already, please be sure to leave me a thumbs up. I know it's a simple thing to ask for, but it really does help me reach more viewers like you in the algorithm. Be sure to smash that subscribe button and to check out one of these videos.